something. So just tell me if you need to see the slide. Appreciate the opportunity to speak to you. I have had a chance to meet many of you over the last day or so, and actually it's been a great pleasure. And I've learned quite a bit in the process of doing that about what your questions may be about commercial. Just wanted to give a super brief intro. M5, we're a company that kind of specializes in creating a link for residential mortgage folks to be able to access and use commercial loan products, and that's, I think, why we're here today. And I've noticed that there's not a lot of commercial being represented here at the event in general. So hopefully this will bring some additional light and information to the subject for you. Let's ahead here. Just briefly, I'd like to know how many of you are now doing commercial loans on a regular basis, and I mean like at least a deal a month kind of a thing, by a raise of hands? Okay, so there's maybe half a dozen in this room, and so I'd like to just point out that that means a great deal in terms of opportunity, because if you look around the room, that means probably 90% of the people are not doing it. I just want to tell about how I got started in commercial really briefly. I had a residential mortgage company by the name of New World Mortgage, and we were doing business in about 17 states, and this is back in the 90s. I ended up selling the company to a bank, and they came in, took over our operations, and I had to sign a non-compete after I sold that company. And my wife has always told me I'm only wicked good at two things. One is loans, and the other is plunging toilets. So I had, maybe one option to really make a living, and that was to find another kind of loan to do. So I decided to make my way into the commercial loan business, and started a company back then, and it took a while to get our legs under us, but we did quite a bit of volume and learned how to do it. And I think that my message about the way I started, I think the reason I'm sharing that with you, it has nothing to do with me. Hopefully it has everything to do with you, which is that if I can learn how to do commercial loans, I was a pure residential guy for 15 years, then anybody can. So it's an opportunity available to anybody, and just to give a little bit of information about how that market really looks. According to the MBA, now I know we're at an NAMB conference, so maybe MBA statistics, but 2015 commercial loan volume is projected to be $289 billion, and commercial mortgage debt is at about $2.5 trillion, and matured during 2013 was about $238.4 billion of loans. So meaning that those all came due, they had balloon payments, etc. And that means that that's a whole lot of refinancing activity, aside from whatever purchase type of activity might be available out there, which is a ton, new construction and building activity. And that's just in the commercial mortgage space alone. Let's go on here. Most states in commercial have little or no regulation. Let me just preface these remarks by saying I'm not an attorney. I'm not giving legal advice here, but I'm just going to tell you from a practical standpoint what I know and what I've experienced in the business. In the majority of states, there's no licensing, there's no regulation about who can be paid, there's no prohibition about referral fees, there's no disclosure of the payment of fees, no RESPA, no TIL. How many of you have been in the residential business longer than, say, about 15 years? I'm just curious. Wow. So you guys have seen the good, the bad, and the ugly in this business. And, I remember the days back in the residential business where you didn't have all the disclosures and the regulations, and commercial's kind of like that, but maybe even a little bit more so. So relate that to the old days in residential. There's very few borders when it comes to commercial, because there's no licensing in most states. You can kind of do it alone anywhere you want to. This is just to underscore some of the reasons that I think there's really, really great opportunities in this vertical. And by the way, I just want to say this. Partway through, if you've got any questions, I'm going to just do a little audience check to see if there's something you're going to want to ask. If I see there's questions, I'm going to be sure to leave time at the end for a Q&A. But if nobody's got any, I've got plenty of material to fill the time, and hopefully it'll be valuable for you either way. But just, if you've got anything, make a note of it, and when I check with you in a couple of 15, 20 minutes, you can let me know if there's any questions. So what this means, with the way it's regulated and so forth, is that referral fees are allowable. I mean, you can pay a referral fee in commercial. There's no specific requirements for what services have to be performed. It could be nothing but a name and a number. It could be really participating in the transaction. It doesn't really matter. And you can pay a referral fee to anybody. You can pay it to, your spouse, yourself, your 18-year-old son, your LLC, your dog if they own an LLC. It really doesn't matter in most areas. And again, I'm not practicing law here. I'm just telling you from a practical standpoint, operationally, what we experience all the time in the business. So that kind of opens up a lot of opportunities. Again, no disclosures of premiums or yield spread. What you're getting paid, for the most part, is not known to borrowers at all, other than whatever origination fee you charge. So again, this is kind of like way back in the old days in residential. Anybody remember those days, by the way, in residential? Okay, you miss those days, don't you? I see some smiles out there. In commercial, loan sizes tend to be larger. That's not always true. There's a lot of specialties within commercial. It's not just the big, gigantic trophy properties. I mean, we're going to show you some examples of transactions here in a minute, because when I thought about what we could do to be of value to you, I think when I was getting started in commercial, I think maybe what would have been of the most value to me was if somebody would have opened up their file cabinet and opened up a bunch of files and showed me actual deals that they had done and explained the deals. That would have given me a good idea, good kind of a profile as to what's really going on in the market, what's available. How many of you feel that would be valuable? We're going to do that because I think that's the best way I can convey a lot of information in a short period of time, so you can kind of get a good feel for the types of things that you're able to do. Again, fewer borders on where you do business. I mean, we do business M5 all over the country, and we don't even hold any kind of licenses whatsoever, other than just a local business license. So it makes it pretty easy in this. And matter of fact, a lot of people that I know actually do business with commercial lending, even internationally. So there's not a lot of limitations on what's available in this vertical geographically. A lot of variety in it. I'm sure any one of you in this room could tell a million war stories about deals you've done in residential, and we could all have a lot of laughs about the things that you've experienced, because, I mean, there's a lot of variety in that as well. But with the various types of properties and deal sizes and so forth, so many different structures, and it's really not even limited just to mortgage lending. Commercial, when I first started out, I was doing equipment financing. And you can do that. There's no borders on that. Factoring. So there's a lot of different types of commercial lending. There's so much variety. That can be a challenge too, because there's an awful lot of information to digest and know, but by the same token, you never get bored, and there's always a new frontier of opportunity somewhere, no matter what may be happening in the market. So we talked about some of those other types. Okay, we're going to just go through for a few minutes and look at a couple of sample deals. And what I tried to do with this is not to necessarily show you a typical sampling. This is more just to try to demonstrate a lot of variety. This isn't necessarily what a pipeline would look like at any given time. I just wanted to make this pretty broad so you can see how many different types of deals are out there, and to dispel any ideas that, hey, this is only for super big, trophy, high-quality properties, because there's a lot of variety in this business. But by the way, before I start going down the road on this, just a minute, a bunch of you have come by the last day or two and talked to us at our little booth, and here's some of the things that I've heard. Some of the, I guess, common misconceptions about the commercial mortgage business people have asked about. They said, this sounds pretty good, but I hear that deals take forever to close. How many of you have experienced trying to do a commercial loan that's taken 6 months or a year to close it? Anybody? I've heard a lot about that. I guess other people have come by and talked to me about that. Really, most of these things turn around in 30 to 45 days, regardless of the size of the transaction for the most part. I've also heard that somehow yeah, you know, maybe it's really complicated. You know, let me just share with you this. All of you guys here in this room are familiar with residential, I'm supposing. I couldn't originate a residential loan to save my life. If you wanted to give me $1 million to try to figure it out right this minute and gave me 30 minutes to figure it out, I wouldn't be able to do it. Because it's been so long and there's so many regulations and it's so complex these days, to my way of thinking, that I don't think this is any more complicated. I think it's just different. That's all. You know, one size does not fit all. You guys are experts on what you do, and I hope we're experts at what we do. So here's a loan that was closed recently. It was a Western bar, and actually this deal got turned down by several banks. The reason it got turned down is because the bank. One of the reasons, the bank committee members, loan committee members, were offended because of the morality of this place, because they had a bikini bull ride every Friday and Saturday night at midnight. And so, believe it or not, that was a reason to turn the loan down. But I figured, hey, it's yeah, and this wasn't in Las Vegas, by the way. This was in Utah. So, all right. Yeah. And anyway, interesting transaction though. This guy had inherited this club from his father. It had been in the family for a couple of generations, believe it or not. It had been kind of run into the ground. He was really working to turn it around and get the revenue back up. They had borrowed a couple of large hard money loans on this property, and those were coming due. They put like $500,000 into renovations. I mean, most of that was like in a whole new parking lot, a bunch of signage outside, electrical lighting in the lot. Anyway, long story short, this guy had a bunch of debt coming due and had some taxes, back taxes and so forth in his history. It had been turned down by several banks. This deal was brought by a broker. We were able to close this thing in less than 30 days. Broker got a check for $27,000 on the deal. You know, I mean, so. And this guy, by the way, was actually a primarily commercial broker. He wasn't really a residential guy, but it could have been anybody that could have brought us the transaction. That's a bar, you know. That was on an SBA 7A type loan. So that's one deal for you. And if there are any questions about the deals along the way, pop your hand up and I'll see if I can move it through quickly and still answer that. Yes?
You said SBA 7. Can you talk a little bit about that?
Yes.
7A program? Yeah. So SBA has two primary lending programs for larger ticket transactions, the 7A and the 504. 7A is a fully guaranteed loan by the SBA. Well, when I say fully guaranteed, they guarantee 75% of the loan. So out of that 1.86 million, 75% of that loan is guaranteed by the government, by the SBA. And so it's kind of like an FHA loan in that it's a guaranteed loan. So lenders are very, very aggressive with those because it's difficult for them to lose with that guarantee. Okay. Typically, those are on real estate. They're 25-year terms, 25-year amortization, floating rate all the way through. You know, no balloons or anything like that. Kind of just long-term floating rate type of deal. You can also collateralize equipment. I mean, we had his excess equipment signage, some other bar equipment and so forth. It was all collateralizing the loan to bump up his loan amount a little bit. So it can cover equipment as well. So that's on the 7A. The 504 is something different. That is actually two loans combined. One is made directly by the SBA. The other is made by a participating lender. They never do the direct portion without the participating lender. It's a piggyback program. The LTV on those is 90. On the 504, it's like 50% for the lender, 40% for the SBA. The SBA doesn't guarantee any portion of the lender's loan at all, but you're only at 50% loan to value. But because you're out there on your own, you don't get quite as aggressive with the 504 as you do with the 7A in terms of underwriting. But the rates and terms are a little bit superior. And it's purely for real estate, no equipment really in 504, just for 7A. So a little bit about that.
What's the LTV on 7A?
85 is the standard, but you can stretch it to 90 if you've got a little bit of additional collateral like equipment or so forth. And by the way, in any of these, and I'm sure you've heard about this, You can throw in somebody's other real estate or a primary residence or whatever as additional collateral, and you can stretch the LTVs so that you're not stuck to just 90%.
What about income qualifying?
What's that?
What about income?
It's a full income qualifying loan. So we're going to look at the last couple of years of tax returns, both personal and business tax returns